Welcome to the Deep Dive. Today, we're plunging into a story that's really set the crypto world on edge. We're talking about a major hack on the CEDAS protocol over on the SUI network.
Yeah, a big one.
But this deep dive isn't just about the hack itself. It's really about the, well, extraordinary, maybe even unprecedented steps the SUI network is taking right now, like literally as we speak.
In this frantic effort to try and claw back those stolen funds.
Exactly. And what that all means for everyone involved, for the network, for decentralization itself.
We've pulled together quite a bit for this one. We're looking at security alerts from places like Hackin, official statements from the SUI Foundation, from CEDAS too, obviously.
Plus reports from the usual crypto news outlets, Cointelegraph, AMB Crypto, Bidget News.
And crucially, the discussions happening, on the ground. The SUI Developer Forum, posts across X, formerly Twitter. That's where a lot of the real-time reaction is happening.
Right, so our mission here is to cut through the noise. We need to understand what happened with the hack, sure, but then really zoom in on this community vote, this thing that's happening right now, end of May, start of June.
Yeah, how does it even work? What's the tech behind it they're proposing?
And the huge debate it's kicked off, right?
Yeah.
About decentralized governance, about immutability. What does this whole crisis tell us about building in Web3? Okay, let's unpack it.
All right, so the whole thing blew up around May 22nd, 2025. That's when the first reports started confirming a major exploit hitting CEDAS protocol. And CEDAS is a pretty big deal in the SUI DeFi space.
And major feels like an understatement here.
Yeah.
The initial loss estimates were just wild. We heard numbers over $200 million, maybe pushing $260 million.
Yeah, staggering sums. For one protocol on one network, that's a massive hit. Context is important there.
Absolutely huge. And the attacker didn't waste any time.
No, sources show at least $63 million was bridged off SUI straight to Ethereum, like almost immediately. And we saw specific reports, I think it was 20,000 ETH, just bam, transferred to a totally new wallet address, super fast.
Okay, so what did CEDAS do? They must have reacted.
They did, yeah.
Okay.
They detected something was wrong and paused their main smart contract, a safety measure, standard procedure, while they figured out what was going on. They said they were investigating.
But wasn't there some, initial confusion? Different messages coming out?
A little bit, yeah. Some friction there. Well, you had analysts looking at the blockchain data, basically yelling, exploit, and pointing to this rapid drain of assets. Some of the early communication, maybe from CEDAS's side, seemed a bit softer, talking about a technical halt or maybe just a bug. It kind of muddied the waters initially.
Right, which probably didn't help user panic levels.
Definitely not.
Yeah.
But the on-chain forensics, plus reports from users who got hit, they quickly painted a clearer picture. It looked like liquidity provider funds, the LP funds, were just getting drained.
Did they figure out the mechanism?
It seems like it involved using spoofed tokens. The attacker apparently leveraged some kind of mispricing or miscalculation in the liquidity logic. Some pointed fingers at CEDAS's own custom math library, possibly having a bug.
Okay.
And there were also these user reports noting that CEDAS seemed to still have some control over the liquidity, even though they'd previously said LP positions were, burned or locked. That raised some eyebrows about the underlying setup.
And the fallout wasn't just contained to CEDAS, right? It spread.
Oh, yeah. Immediate ripple effects. Tokens trading on CEDAS just absolutely tanked. Many dropped like 75% or more in value.
Okay.
And Scallop, another big money market on SUI, they had to halt borrowing for a bit, just as a precaution. It sent shockwaves through the whole SUI ecosystem.
Okay, so that's the hack itself. But then the response, this is where it gets really interesting and maybe controversial.
Exactly. This is where the story shifts. The SUI network's response was incredibly fast, trying to, stop the bleeding.
Right, the validators. The network validator stepped in quickly with what they called emergency measures.
That's the key part. Their main action was to freeze the assets, or, more accurately, the assets in the two addresses they identified as being linked to the attacker.
How did they actually do that? Was it like a network-wide halt?
Not exactly. Not initially. It was more granular. Each validator individually configured their own node, which they control. Remember to basically just ignore any transactions coming from those two specific hacker addresses.
It's like those addresses just couldn't send anything out, according to most of the network validators.
Pretty much. It wasn't a change to the core protocol rules at that stage, but a coordinated action by the operators of the network infrastructure, a choice they made.
And did it work? Did they manage to lock down a lot of the funds?
They did manage to immobilize a really significant chunk. Roughly $162 million worth of digital assets were effectively stuck in those wallets because of this validator action.
But not everything. You mentioned the attacker was fast.
Right. Crucially, about $60 million had already been moved off-chain, mainly to Ethereum, before that validator freeze really took hold. That money was gone from Sui's direct reach.
So what happens to that $60 million?
Well, Cetus is working on it. They've brought in security firms. Inca Digital was mentioned, and they're cooperating with international law enforcement, trying to trace it, recover it. It's a tough process.
And there are bounties too, right? To try and incentivize recovery or identification.
Yep. Cetus put up $6 million as a white hat bounty, basically asking the hacker to return the funds and keep a portion. And then the Sui Foundation added another $5 million reward for information leading to the identification of the attackers.
Okay, so freezing the on-chain funds was step one. But the step that's really got everyone talking, the one happening now, is this proposal for an on-chain community vote to actually take back those frozen funds.
Exactly. That's the unprecedented part. After the freeze, Cetus made a formal request. They asked the community, specifically through the validators who represent all the staked SUI on the network, to approve a way to recover those funds sitting in the frozen addresses.
And the Sui Foundation is involved how? Are they driving this?
They're facilitating it. They agreed to set up and run the vote mechanism for the validators, but they've been really clear, repeatedly stating they are neutral on the outcome.
Neutral? How are they showing that?
Well, they've said they won't vote with their own substantial stake. They're excluding it entirely from the calculation to avoid influencing the result. Their role, they say, is just to provide the infrastructure for the vote.
And for listeners, if you hold or stake SUI, your voice in this is through who you delegate to.
Precisely. You delegate your stake to a validator whose stance, yes, no, or maybe even abstain, reflects your own view on this proposal.
Wow.
That's the mechanism for staker participation.
So what exactly is being proposed in this vote? What's the core idea?
It's pretty bold. They're proposing an actual upgrade to the Sui protocol software.
An upgrade?
Yeah. And this upgrade, if approved, would specifically allow the network to reclaim all the funds currently frozen in those two hacker accounts. And here's the kicker, without needing any signature or private key from the hackers themselves.
Whoa, okay. That definitely sounds unusual for blockchain. So if the vote passes, if they reclaim the funds, where do they actually go? Not back to Cetus directly.
No, the plan is to transfer them to a dedicated trust wallet. This wallet is set up with a 4 of 6 multi-sig security arrangement, meaning 4 out of 6 designated key holders have to approve any transaction before funds can move out of that wallet. It adds a layer of security and shared control.
And who holds these keys?
It's a mix. 2 keys for Cetus representatives, 2 for the Sui Foundation, and 2 for OtterSec, who are a well-respected security auditing firm in the crypto space. Gives it some independent oversight.
Okay, so the funds land in this multi-sig wallet. Then what? What's the intended use?
They'd be held there in trust, temporarily. The stated goal is for Cetus to then use those funds as part of a larger plan to redistribute them back to the users who lost money in the hack, making them whole.
And this is part of a bigger recovery plan from Cetus?
Yeah, apparently so. That plan also involves Cetus using funds from its own treasury, and there were reports of them potentially getting a loan from the Sui Foundation as well to cover the gap, especially for the funds that were moved off-chain.
So this vote, it started recently, end of May.
Yep, kicked off Tuesday, May 27th, around 1:00 p.m. Pacific time. It's scheduled to run for up to 7 days, so potentially ending around June 3rd.
But it could end sooner.
It could, yeah. There's a minimum voting period of 2 days. If after 2 days there's already a clear, mathematically conclusive result based on the stake that's voted, it can end early.
How does the voting actually work? Is it transparent?
It's designed to be. It runs on a smart contract deployed on the Sui network itself. Validators cast their vote yes, no, or abstain. And importantly, once they vote, that's it. No changing your mind.
And the votes are weighted?
Yes, weighted by the amount of SUI staked with each validator. More stake delegated means your validator's vote carries more weight, and again, the foundation's stake is out of the equation.
So what does it take for this yes vote to actually pass and trigger the protocol upgrade? What are the exact criteria?
Okay, there are 2 main conditions, and both have to be met. First, you need enough participation. It's called quorum.
Right.
More than 50% of the total possible stake on the network, not counting stake delegated to validators who choose to abstain, has to actually cast a yes or no vote. So a majority of the active stake needs to weigh in.
Okay, so condition 1, enough people, or rather enough stake, has to show up and vote. What's condition 2?
Condition 2 is about the result among those who voted yes or no. The total weighted stake voting yes must be greater than the total weighted stake voting no. Simple majority of the participating weighted stake.
Got it. So high participation and a yes majority among participants. If either of those fails by the deadline, June 3rd,
Then the vote fails. No protocol upgrade happens based on this specific proposal. The status quo remains, at least regarding this particular recovery mechanism.
and people can watch this unfold in real time.
Absolutely. The major SUI block explorers, Space and Time, Suskin, SUIVision, they all have dedicated pages set up. You can see which validators have voted, how they voted, and how the overall stake weighting is shaking out. It's quite transparent.
And just to reiterate for listeners, staking SUI, your influence is through your validator choice. If you care about this, check how your validator is voting or intends to vote.
Exactly. And if you want to dig really deep, the actual source code for the voting smart contract package is up on GitHub for anyone to scrutinize.
Okay, let's dig into the tech a bit. This proposed protocol upgrade. How do you actually code something that lets you take funds from address A without address A's private key? That sounds like breaking blockchain 101.
It definitely pushes boundaries, yeah. The proposed mechanism is designed to be incredibly specific, surgical even. It's not a general power grab. The core idea is to create a temporary one-time exception. They want to allow a specific, newly created alias address. Think of it like a temporary master key, but for a very specific lock to act as if it were the two hacker addresses.
Okay.
But, and this is the absolutely critical part, it can only act as those hacker addresses for two predefined specific transactions. One transaction designed to drain the first hacker address, and one for the second.
So this alias couldn't just, like, start spending other funds from those wallets or sign other messages?
No, absolutely not. That's the safeguard they're emphasizing. This mechanism is built only for these two recovery transactions. It would be completely inert, useless for anything else.
How do they define that technically?
They plan to specify two precise data bundles called tuples. Each tuple would contain three things: the original hacker's address, the special aliased address that's allowed to act for it, and the unique digital fingerprint, the transaction digest of the exact recovery transaction it's authorized to sign.
So the alias can only sign that specific transaction for that specific hacker address.
Precisely. The protocol rules would be temporarily amended to say, for this one transaction digest associated with this hacker address, this alias signature is valid. And that's it.
And these actual recovery transactions, the ones that will move the funds to the multisig,
Yeah.
they aren't finalized yet.
Not yet. They'll be fully crafted, their digests calculated, and then made public if the vote passes. Only then would the protocol upgrade specify authorization for those exact transaction hashes via the alias.
Okay, that technical specificity is clearly important to them. But regardless of the mechanics, this whole situation, the freeze, the proposed vote to overlay finality, it's just blown up into a huge debate, hasn't it?
Oh, absolutely. Across the entire crypto space, it hits right at the core of fundamental questions about decentralization, immutability, all the big stuff.
And the comparison everyone seems to be making is,
The Ethereum DAO hack back in 2016.
Yeah.
Yeah. Critics are immediately drawing parallels, highlighting the contentious decision then to hard fork Ethereum to effectively roll back the chain's state and recover the stolen DAO funds.
what's the main argument from the critics of this SUI proposal?
The core argument is that coordinating validators, even through a vote, to push a protocol change that forcibly moves funds from specific wallets. Well, that's not immutability. They're calling it mutability by committee.
They're saying the principle is being violated even if the technical comment isn't a block reorganization like Ethereum's.
Exactly. The argument is that saying it's not a rollback because blocks aren't reorged is just semantics. It's a technical dodge, they claim. The end result is still a reversal of validated final transaction state initiated by a controlling group, a targeted override, as some are putting it.
There are also questions about whether this really counts as decentralized governance.
Right. Some argue this feels less like a broad community consensus on fundamental rules and more like a one-time special access mechanism being pushed through by the validator set, who represents stake, but maybe not the entire diverse community of users and builders.
Any whispers about why this extraordinary measure is being pushed so hard?
Well, you inevitably hear suggestions of governance capture. The idea, or maybe suspicion, that pressure might be coming from large investors or VCs who lost significant sums in the hack, framing it as protection for the powerful, not necessarily a principled community decision. Whether that's true or not is hard to say, but it's part of the debate.
People are contrasting this approach with other networks, too.
Yeah, comparisons are being drawn. For example, contrasting Sui's reactive move here with something like Cardano's ongoing Voltaire phase, which aims to build more layered, potentially opt-in governance systems with safeguards before crises happen, rather than resorting to retroactive state changes.
I guess the ultimate criticism boils down to, is this still truly decentralized?
That's the million-dollar question, isn't it? If the rules can be changed after the fact by a vote of the powerful or the staked majority to seize funds from specific accounts, does the chain start to more like a Web 2 database with admins who can make exceptions, or a permissions system?
And didn't the initial freeze action also draw fire? The validator coordination?
It did. Some critics framed that initial validator action of ignoring transactions from the hacker wallets as a form of transaction censorship, undermining the network's neutrality even before the formal vote was proposed.
Meanwhile, what's the Sui Foundation saying amidst all this controversy?
They're sticking to their guns on neutrality regarding the vote's outcome. They keep emphasizing their role is just as a facilitator. They also point out they required CETUS to commit to making users whole if the funds are recovered via this vote.
So positioning it as a response to an extreme situation.
Yeah, they've described it as an extraordinary request in response to extraordinary need, acknowledging the unusual nature but justifying it by the sheer scale of user funds affected.
Okay, stepping back a bit from the immediate vote drama, Sui also announced a broader security initiative, right? Trying to prevent this kind of thing in the future.
Yes, that's an important piece of the puzzle. They've committed $10 million to a network-wide security plan.
$10 million, what's that going towards?
The focus seems to be on bolstering the ecosystem's defenses. Things like funding more thorough security audits for protocols building on Sui, creating stronger bug bounty programs to incentivize finding flaws before hackers do, and generally improving the tools and resources available for developers to build more secure applications from the ground up. It's about being proactive and fostering shared responsibility.
And they're still maintaining the hack wasn't a Sui network flaw.
Yes, the official line, and analysis seems to support this, is that the vulnerability was within CETUS's own custom code, specifically a math library they built. The Sui Foundation has been very clear. It wasn't a flaw in the underlying Sui blockchain itself or in the MOVE programming language.
But they still acknowledge it looks bad for the whole ecosystem when something this big happens.
Absolutely. They recognize that user impact, regardless of the root cause, reflects on the network as a whole. Trust is ecosystem-wide.
How are they deciding exactly how to spend that $10 million security fund?
Sources suggest it won't just be a top-down decision from the foundation. They plan to work collaboratively with the developer community on Sui to figure out the best ways to allocate those funds. Again, reinforcing that idea of shared security ownership.
So long-term, we're talking more audits, better tools, more monitoring.
Exactly. Working with third-party security experts, trying to raise the bar on code quality, especially for complex financial logic, and keeping a closer eye on potentially risky areas within protocols built on the network.
Let's look at the market reaction. How did the SUI token price handle all this drama?
Well, the initial hit was pretty sharp, as you'd expect. The price dropped about 17.5%, roughly from the $4.30 range down towards $3.54 right after the exploit became public.
Has it recovered at all?
Yeah.
Or just stabilized?
It seems to have found some footing, yeah. Price action stabilized somewhat in that $3.40 to $3.60 range in the days following the initial drop.
Any technical indicators suggesting the panic selling might be over?
Some signs, maybe. The RSI, the Relative Strength Index, climbed back from oversold territory towards a more neutral level. That often indicates selling pressure is easing off. And some on-chain volume metrics, like on-balance volume, showed maybe some modest accumulation, people buying the dip, perhaps.
What about activity on the Sui network itself? Is DeFi recovering there?
We are seeing some tentative green shoots. Total value logged, or TVL, on Sui, which took a big hit, has started to slowly climb back up.
That's interesting.
And even more interestingly, the bridge TVL, that's value coming onto Sui from other blockchains like Ethereum that actually saw a noticeable surge, which could suggest that some cross-chain users, maybe sophisticated ones, are seeing opportunity or regaining some confidence.
But not everything is back to normal yet.
No, definitely not. Metrics like daily trading volume on DEXs, decentralized exchanges, and the revenue generated by apps on Sui, those are still lagging below their pre-hack levels. So the signs might suggest the start of a recovery, but it's clearly a slow and fragile process right now.
Okay, so we've covered a lot of ground. The hack, the dramatic freeze, this really contentious vote happening now, the technical wizardry proposed, the governance storm, the security response. What's a big takeaway here for you listening? Why does this specific incident matter so much?
Yeah, because this isn't just another crypto hack story buried in technical details. It's really a live, real-time case study. It cuts right to the bone of the biggest challenges and, frankly, the messy realities of trying to build and run these decentralized systems.
It throws that fundamental tension into sharp relief, doesn't it? The ideals of decentralization and immutability versus the practical, very human need to protect users and fix catastrophic errors.
Exactly. There's no easy answer there. And it forces us all to grapple with what on-chain governance actually means in a crisis. Who decides when the rules can be bent? How do you do that quickly without just centralizing power? And what are the precedents being set? What are the long-term ripples of decisions like this?
So understanding this specific SUI situation gives you, the listener, a really valuable lens. You get insight into the vulnerability, sure, but also the sometimes controversial tools and mechanisms these networks are wrestling with to build resilience.
And it really pushes us to question the buzzwords, right? Immutability, finality, decentralized governance. What do they really mean when the rubber meets the road, when huge amounts of money are lost and user trust is on the line? It's easy to talk principles, harder to apply them in chaos.
So we've gone from the shock and the Cetus exploit, through the validator's quick freeze, deep into the mechanics and the firestorm around this recovery vote. Touched on the specific tech, the security fallout, the market jitters, but mostly we've explored this huge philosophical and practical debate it's triggered about what Web3 is actually aiming for.
It's incredibly complex, moving super fast, and there are definitely no simple right answers here. It just starkly highlights how cutting-edge and challenging this whole endeavor of building decentralized systems really is.
The vote is happening now. The outcome, whatever it is, and the actions that follow. The entire crypto world is watching this very, very closely. It's a major test case.
It really is. And maybe here's a final thought to chew on after this deep dive. If a system built on the promise of unchangeable records immutability decides it can change those records, even via a community vote, to recover stolen funds after the fact, does that ultimately make the system stronger, more user-friendly, more adaptable, or does it chip away at the very foundation, that core trustless principle that makes blockchain different in the first place? It's a fundamental dilemma.